Hey everybody, Paul Meeks here. Welcome back to Tech Tune Up with Paul Meeks, hosted by my buddies here at Benzinga. And we must be moving up the ranks because we had been going live on Friday afternoons. Now we will go live on Tuesday mid-mornings. And so on this show, I go through the key tech news of the week. Sometimes it's company related, sometimes it's thematic, sometimes it's macroeconomics. But I don't just regurgitate the news. I talk about the highlights, and obviously they're going to have an impact on those individual companies, but sometimes they're much broader tech investment tells. So as always, let's get right at it. The first stock in the news you might be surprised that I'm talking about is McDonald's. McDonald's had a tech outage that took down this massive franchise just last week. So I want to make one point. I've made it before, but it's worth reiterating. In any industry, in any sector, in any geography around the world, whatever you do for a living, if you are the best sourcing your technology and managing the technology, you are going to be the best in what you do. And so this is obviously a flaw, but always look for the underlying technology, even with your companies that you invest in that are not necessarily technology companies. Next, probably the biggest news of the week, and it continues for a few more days, is Nvidia, the AI enabler semiconductor company, is having in San Jose, California, a 4-day poobah for their software developers called GTC. Yesterday, live here on Benzinga's YouTube channel, they did show CEO Jensen Huang's keynote. I watched it too. So here are my takeaway messages. It is very important for Nvidia to continue to leave the perception that they are ahead in AI chips because advanced micro devices, AMD, is coming. And in the first iteration of AI, which is building large language models, Nvidia has essentially all the market share. And those goodies will probably continue for at least another year. But in the next stage, which is called inference, where you take all the data from the large language models, and then you infer data patterns that you can use in AI products, that next stage may not necessarily require NVIDIA's semiconductor horsepower. And so how do they stay relevant? How do they keep their dominant share as we go from building large language models to inference? So yesterday, they announced yet a bigger chip, more powerful, better power consumption. And we'll see how that goes. It's supposed to have a 5x power enhancement. And obviously, we need to keep that string running to keep this semiconductor technology lead over AMD. Also, they announced a software product, which is kind of cool for a semiconductor company. And this is a software product that'll enable people who buy their chips to buy a software license to better manage those chips, better run those chips for the inference stage of AI. So it was a combo semiconductor product enhancement, no surprise, maybe a bit of a surprise with the new software. We'll see how it goes because what NVIDIA is trying to do here is what Apple did so successfully so many years ago to become the world's largest market cap stock, which is they build a wall garden around their products. They have an ecosystem. And Apple did this very, very well with mobility and the peripherals that feed into that. And of course, NVIDIA wants to be what we call in technology, the entire technology stack for AI. Not just their semiconductors, best power and best performance, but also we now have this software twist. So we'll see what happens. But one of the things I'm looking for is right now, 11:30 a.m. Eastern time, the conference with NVIDIA in Silicon Valley goes from essentially a tech specs conference to right now they're talking to Wall Street analysts. Obviously, I'm here, so I can't listen to that live. I will follow up after the fact because I want to know what these announcements mean to the financials, because when I know the financial impact, then I know what the stock's going to do. Next in the news, TikTok, we talked about this last week, the privately held, controlled by a Chinese company called ByteDance. The House of Representatives is going to force the divestiture of TikTok in the United States so they can continue to operate in the United States and serve their 170 million users. So that passed the House of Representatives with ease. Now it goes to the Senate. It's going to be a tougher road to hoe there, but President Biden has already said if it passes the Senate and it comes to my desk, he won't veto it. It'll become law. And it is a major piece of legislation and can have some really broad impacts, not just in the technology sector, but geopolitics and the rivalry between the US and China. Next, I am asking you, because it's going to go public very soon, to not participate, avoid the Reddit IPO. I'm just very worried about this company, which essentially is a social media company trying to make money on digital ads. The problem with that is that game is over. It has been won by Google, Meta, and probably in third place, Amazon. And the FTC, the Federal Trade Commission, is now looking into Reddit's data licensing model. And if they take that away from them, no data licensing, and these guys are left to their own devices with just a digital ad model, when everybody else has gone to the big three, this company is going to struggle. Stay away from this IPO. Let's see what happens after the IPO is priced. The stock comes back, maybe becomes a better buy, but this is a dumb IPO to invest in. So the other thing I glossed over here, but I did want to talk about Apple. Apple's always in the news, of course. This is very interesting to me. Apple is forced to pay this week a $490 million settlement for essentially fibbing to shareholders. And this is particularly interesting because the liar was none other than CEO Tim Cook. And CEO Tim Cook has been the calm, cool, and collected guy that took over for Steve Jobs, which obviously he was very flamboyant when he died in 2011. And so even Cook got caught up in the hyperbole, and what he did was essentially exaggerating Apple's success in China back in 2019, right before that particular geography collapsed for them. But even the gold standard of CEOs, Tim Cook, gets his hand caught in the cookie jar. Very interesting. So next on to Meta. Meta is always in the news, and I told you that one of the biggest tech trends and one of the things that really freaks me out covering this space is the step up by government, not just the United States, but abroad, particularly the European Union, with regulating and tightening the screws on these tech companies. They are prohibiting them from doing further mergers and acquisitions. And then they're actually probably going to force a couple of them to have some divestitures. Like I wouldn't be surprised, for example, if Google someday is forced to spin off YouTube, or if Meta is forced to spin off WhatsApp and Instagram. Could easily happen. But anyway, obviously I'm a free market disciple, and I don't like to see this. And Meta, in the most recent regulatory tug of war, is now being accused of being a drug dealer, right? People doing drug deals on their site. And this gets back to my complaint about the legislation that has since 1996 run America's internet companies. It's called Section 230. And it essentially keeps folks in social media like Meta and Google out of trouble because they are just serving as the data pipe. Crap data goes into the pipe. They forward it along, crap data comes out of the pipe. They're not, at least yet, being required to vet the material going in and out. I actually think sooner or later Congress is going to have to, and probably will, overhaul Section 230, which is U.S. legislation since 1996. And you know what? It could really end badly for some of those companies that have to upend their business models. The next is Netflix. Netflix, as you may remember, is always my favorite in video streaming. If you ever want to play new media, just hold your nose and buy more Netflix. Don't tangle with Disney or any of these other companies that are trying to morph from linear old school television to video streaming. But specifically with Netflix this week, they have a culture memo that they require all of their potential employees to read and sign off on. And for many years, it's been set in stone. Just this past week, very interesting that they have tweaked their culture memo. And one of the things that they're now in favor of is they're telling employees, if you work at Netflix and you're a creator, you might have to sign up for promoting some video that you may not agree with. And so here is a opportunity for creatives to have more free reign. Some people would think that's a good thing. Some people would think that's a very bad thing. And the other thing that they're particularly careful about is there have been a lot of data leaks, internal memos and such from Netflix that have been leaked to the press in the last couple of years. So they're also trying to tighten the screws there. But interesting, a pretty significant cultural change at Netflix, and not just rumored, in black and white print. Next, I have been poo-pooing the EV industry, electric vehicles. And here is another great story of a casualty. Hertz, the car rental company, last week fires its CEO. And this is the guy that a couple of years ago pushed Hertz to buy 60,000 Teslas. They only ended up buying about a third of those, but they originally had an order for 60,000. It looks like when you run a car, you do not want to rent an EV. I'll give you another example. Last week, I'm giving a tech investing presentation in Naples, Florida. If you want to check out the presentation, I put it up on my LinkedIn feed. But when I go to my car rental company, they are begging me with the lowest price available, even less than a subcompact gasoline-powered car, to rent an EV. They are desperate. This cannot be a good look for the EV industry. So that's the story of Hertz and its aborted mission with EVs. Next is Adobe, and this is an interesting story. Adobe announced their quarter last week, and Adobe blew it. And Adobe is a marquee tech company, one of the largest market cap tech companies, very well known, very well respected. But here is an example of a company that if it doesn't transition quickly to AI, that moat, which was once around that company that gave it a real durable competitive advantage that took the stock price to the moon, AI is going to build some moats around businesses. Those are the companies you want to invest in. And AI is going to destroy some of the moats around great one-time businesses. And it looks like that might happen over at Adobe, because OpenAI has a new product called Sora, AI product, essentially taking text input to create video. And that might take Adobe to the woodshed. And that's how the stock acted after they announced their results the other day. So that's got me really worried. And AMD is not a small fry. AMD was a stock market darling for a long time. AMD, Advanced Micro Devices, the number 2 in AI chips to Nvidia, must be gaining some traction, because the specs on their latest AI chips were so good, both for performance and power consumption, that they got blocked for export to China. If they didn't have the proper specs, they wouldn't be blocked. So maybe AMD is closing the tech gap with NVIDIA. And that's what NVIDIA is trying to do at this week's developers conference. Tell everybody that their tech lead over AMD will be not just sustained, but maybe even widened. Next, this is kind of an interesting story from Google and Apple. Google, obviously has Gemini, which is their AI product. They're one of the leaders in the AI revolution, even though they've screwed up some early product demos. I think at the end of the day, they'll get past these PR miscues and they will become an AI powerhouse. But Apple is the company that has been criticized for not jumping yet on the AI bandwagon and continuing to lean too heavily on the iPhone, which is 60% of sales. But what Apple announced this past week is They are expected to put on their consumer electronics devices, including their phones, Google's AI Gemini. We'll see what happens, but you do have a potential AI venture between two of the major tech companies. We'll see if it's successful. Next, this is another interesting tidbit from Apple. Apple did make an announcement, kind of under the radar. Wasn't a lot of big press, but they claim that they have developed a new MM1 multimodal AI model, which essentially allows AI users to simultaneously manipulate text and data and video. So it could be a good deal. But if for no other reason, even if it's just optics, Apple stock has been hammered. It's been a real tech underperformer for several months now, and they need to turn it around by at least putting in investors' heads that they got some AI game. Maybe this is a bullshit announcement, but at least it's a step in the direction, at least public relations wise. Next, this is a stock that we've talked about a lot. It's Super Micro, SMCI, customized data servers for AI chips, primarily from Nvidia. The stock has gone up 12-fold in 1 year. And we've been early on the stock, and it has been a good call. A couple of weeks ago, the stock was down from 1,000 to 800. While I was talking on this show one Friday afternoon, I said buy it, and the stock made up that entire performance by the next show. So that was a great trade from bottom to up. Then I asked you last week or so, because the stock continued to run to an egregious price, to take some off the table. And that was a very good call, because this morning the company announced a stock offering, and the stock is down about 10, 11, 12% today because of the new shares that will be coming to the market. I will be a contrarian on this name. If this stock gets whacked too much on the announcement of this stock offering, which essentially dilutes shareholders, even though it doesn't have anything to do with the company's fundamentals, I'd probably turn around and trade this successfully again, particularly if that stock gets to around $800 a share. It's quite a bit away from that, because it's been such an explosive trade for us on the upside. But I do think we have a chance to buy the overreaction to the stock offering and get back into SMCI. The last stock I want to talk about today is a Chinese company that has some mojo that definitely is going to impact Apple's iPhone franchise. This is the Chinese company Huawei. And this company, very interestingly, even though they were on the US export blacklist for a long time, so they could not import the necessary components, including the microprocessors for their phones, they developed, don't know how they did it, but they developed a key chip that allowed them to embed this in their new phone, and their phone is called the Mate 60 Pro. And Huawei just announced financial results the other day, and they had a nice comeback in their business, revenues better than expected. And I think this Huawei phone, with not a US chip inside, but a Chinese chip, the Mate 60 Pro, is taking some serious market share in China, which is a really important market for Apple, and specifically its iPhone 14 and iPhone 15. Wow, that would be a big turn of events, and that would take a nice tailwind at Apple's back and probably, unfortunately, make it a pretty stiff headwind. So those are my stock tells. Now let's get in, as we always do at this time, to our tech favorites. No changes here. I like in cybersecurity more than any other stock, even though some of the other plays in cybersecurity are better known. I like CrowdStrike, ticker symbol CRWD. It has definitely proven its mettle because it kicked ass relative to the other cyber stocks this recent quarterly reporting season. The next one, Micron, number 3 in the world, the leader in the US in memory chips. This company is in the news, or will be in the news, tomorrow after the close. So Micron will be reporting. I think they're going to beat the numbers. Now, they will have a loss for this quarter as they're about ready to turn the cycle in memory chips. But I think on tomorrow's conference call, when they give guidance for the next period, they're going to talk about an inflection of the business where they go from a year or so of losses to gains. And once the semiconductor cycle for memory chips turns, they can have an explosive upside. They could go from losing money, which they've done in the past year, to making as much as $12 earnings per share a couple years out. So I like Micron, even though it's trading at an all-time high. This has been a great pick for Benzinga, but I still think there's upside. And I think the company may not surprise tomorrow night on their quarterly past quarter, but I think they're going to give guidance to a nice acceleration and inflection in the business. T-Mobile is my pick in mobile. Microsoft, obviously the AI bellwether with probably Nvidia, Meta, Amazon, Synopsys, and EDA software, which is software used by semiconductor engineers to design chips. Nvidia, Nvidia is actually down a little bit today on maybe too high expectation going into their software developers conference. What I do with Nvidia is I just hold it. And if it does have a significant dip for almost any reason, I go back and buy some more. I like NICE. I like IAC. I like Broadcom, ticker symbol AVGO. I think that one is particularly timely because it did have a back off after last week's quarterly report. The stock's pretty cheap. I like Mercado Libre, the Amazon of Latin America. And last week I put on my favorites list, Duolingo, the learning languages software company. So those are my tech favorites. I always take a look to add, and I always tell you, not just strategically which ones are on the list and which ones are off, but tactically when to buy more, when to trim the position, when to exit it or enter it with urgency. So stay tuned here. So the next thing I want to talk about and finish with is our tech trends. So I've told you before, when it comes to tech investing and investing in any aggressive growth stocks for that matter, 80% of the game is the level of US interest rates and 20% of the game is fundamentals, because these stocks are so much more sensitive to rates than kind of sleepy, slow growth value stocks. And tomorrow, the Federal Reserve Board, our central bank since 1913, will tell us, as they do every 6 weeks, where they're going with rates. I think when Chairman Jay Powell goes to the podium for the press conference at about 2:30 tomorrow afternoon Eastern, I think that he might actually rein in expectations for how quickly they're going to pivot to lower rates, because rates have been going up nonstop for 2 years. And when they do start to lower rates, maybe they're not going to lower them as steeply as people thought. So you guys, tomorrow's action, if Powell says what I think he's going to say, could be a bummer to some tech investors. And so I do not invest aggressively ahead of that announcement. At least wait till late afternoon and maybe the following day to trade your positions. You might get a little bit of Jay Powell tech stock dip in the next 24 hours. I've reported on this before, but I'm following the continued acceleration in tech jobs. So last year, 2023, we bled almost 300,000 tech jobs in the United States. This year so far, we've bled about 50,000. And it's very interesting because the underpinnings are we have very low unemployment in America. So tech is showing you that there are AI haves and there are AI have-nots, because that's obviously the theme that we're grasping. And the AI have-nots are in a tough position, and they are firing people aggressively, which I think is very, very interesting and very contra to the trend that we see in the rest of U.S. employment. So stay tuned. I think another thing in the job world, which I thought was pretty interesting, was the NLRB, right? The National Labor Relations Board, the folks that support the unions. They are embroiled in a lawsuit with Amazon and some other tech companies And so now we're seeing really for the first time in US history in a meaningful way, the battle between the unions and some of these tech companies. Remember, I told you I'm already worried about the increased regulation in the US and abroad in the European Union with some of these tech companies. But now that the unions are on board, also harassing these tech companies, another example of be careful with your tech companies. You got to have the right ones that don't have the regulatory blocks, because everybody is starting to turn the screws. And then the last thing I think is pretty important is, and I said this before, man, this legislation that has passed the House and now it's off to the Senate. And if it passes the Senate, it will be signed into law by President Biden to essentially force the Chinese company ByteDance to divest TikTok. This has major implications, not just because TikTok has 170 million users and our entire US population is only 340 million. But man, this goes front and center to the critical relationship or not in the tech sector and even broader between the US and the Chinese. The last thing I will end with is a public service announcement. This is kind of interesting. Last week, when I was going through my stock tells, I was whining, as you may recall, about the Grayscale Bitcoin Trust ETF, which is ticker symbol GBTC. It's an ETF, an exchange traded fund, a way you can passively invest in Bitcoin instead of picking the coin itself. I complained that how can you have a exchange traded fund, a passive investment vehicle that's only purpose is to copy the benchmark, in this case, follow Bitcoin, that had a total expense ratio to investors of 1.5%. So I complained about it right here on the show last week. Other folks did the same thing. And just today, the CEO is promising to lower that ETF's total expense ratio. So we did a public service. Prices are coming down. People have less fees, and it's a glorious day for what we promoted on the show. So you guys, that's it for the week. I'm Paul Meeks. I'm with Harvest Portfolio Manager here in the Bayou in Charleston, South Carolina, hosted always by my buddies at Benzinga. And I have a special thanks to our director, Aaron Thomas, and we will see you next week.